The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the November 13th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We begin our day with quite a flush to the downside. All U.S. indices are trading lower. 344 points for the Dow, 78 for the S&P, 412 for the NASDAQ 100, 41 for the Russell, 119 for the transport, semis down 248, NASDAQ Composite 427. You've got gold that's off $3, silver's down 60 cents, light sweet crude is up 34 pennies, natural gas up 11 cents. I've got Palantir's chart up on my screen for me. Why do I have that up? Well, I just happen to have it up. I was looking at something. First, on a daily basis, Palantir, I'm going to share something with you, though. It's going to be, I think, pretty helpful, especially if you are in Palantir. So on the daily time frame, we can see the Rhodes Momentum Indicator top. How do we see that? We see the black diagonal lines. As soon as the bearish reversal candle forms, that's what confirms that pattern. We had a nice gap to the downside that formed out here in the trading session of November the 4th. That confirmed that pattern. Price right now, price closed below a prior profile, bullish structured profile. A new one formed, another bullish structured profile. We are trading below the low of that today, 176.63. Of course, when we look to the right, we can see the weekly chart. We can see that price is testing weekly profile support. It's a buy zone as well. It's between 172.77 and 176.60 or so out there. But that's, I want to focus on and you can see the weekly chart last week formed a Rhodes Momentum Indicator top. So a question might be, where's the buy on Palantir? Now, let me see if I can do this by doing it this way. Here we're going to take a look. I want to show you the power of these weekly profiles. I don't believe that Palantir has closed below the bottom of a weekly profile almost ever. But we're going to take the screen because to look at it all the way on my left-hand side when price was lower, in the dollar-ish range versus where we're up 175s was hard to completely tell. But just take a look at this here. You can see the bottom of each of the profiles that we've got out here. You did test the profile back on April 11th. We made that nice low out there. We tested the center of, quite frankly, your profile back on January 17th. Now, just going to keep sliding this over. We're just interested to see, has Palantir ever closed below the bottom of a weekly profile? Here again, we have another one that was tested back in August of 2024, bottom of a weekly profile. Okay, here's the first close below, and it's by a smidgen. We don't let smidgens, kind of tip the scales here. The close was 14.13. The bottom of the profile was 14.23, and the following week, price got back above it. So that was a false breakdown message out here. Look at how far back we are going out here. Okay, so now we've gotten back to where Palantir closed below the bottom of profile. That began December of 2022 out there. Okay, December 2022. So if somebody were to ask me where's a buy point potentially on Palantir, you'd have to say it's right here, right now, or close to it, 172.77 being the bottom of that profile. Now, what happens if price closes below the bottom of this profile? Well, it could be signaling a change in trend. It could be, right? Just like prior times, though. A few times, that is. We have to wait and see till next week whether or not it becomes a false breakdown message out there. So right now, these are the important numbers for you to be paying attention to in Palantir. Let me make sure I give them to you. 172.77 is the bottom. The center's at 176.63. That's your buy zone. Resists up at 192.08. Now, the issue with regard to making a all-out buy call right now is typically you would see some type of bottoming signal. Now, I only have a 30-minute time frame chart up on my screen right now. I'm going to go ahead and expand it out so we can take a look at it. And we are trading back into a prior set of lows. So there's a TD9 count topping pattern that forms on at 10:30 in the morning on November the 10th. And we've got an A to B equals CD pattern on the downside that we could draw. That's not so much whether we can draw an A to B equals CD pattern right now. It looks to me more like price is gunning for the 171.46 level. And remember, the bottom of that weekly profile is at 172.77. I would say that is a likely potential entry area if you were going to add to a position. And then if we get at close below the weekly profile out there, you may just exit it and wait to get another confirmation. But that's what's going on with Palantir. It's got a cool set of patterns out there, and just take a look at the weekly profiles out there. So I hope that does help folks out. Now, let's go see what's going on inside the equity futures market. That's probably what you're most interested in. And if we just simply start with the intraday trading of the NQ, and that's what I'm going to pull up on my screen out here, and I'm going to go focus on a couple of different patterns out here, or time frames, I should say. So let's populate the 30-minute time frame. What are we going to see out here on a 30-minute time frame as soon as this populates? You're going to see that we are forming a TD9 count bottom pattern by 11:30. That pattern will likely form, and then that pattern will confirm at 12 noon. That's the 30-minute time frame chart. That says that price should rally up towards this oscillator and change line, currently printed at 25,421. If we look at the 60-minute time frame chart, we already have a confirmed TD9 count bottom pattern. It's going to complete that pattern at 12 noon. So what this tells us is that if we are going to see a bottom today, it is likely going to form between 11:30, or we can say now, quite frankly, and noontime. Now, the only reason we can say perhaps now is because we do have a Rhodes momentum indicator bottom pattern on the 10-minute time frame chart. What's going on now? You like to have synergy here. What do you mean you like to have synergy? That's just a random thought, Stevie. You like to have synergy on the same time frame for all four instruments out there. So let's go check out that synergy out there. Synergy for the 60-minute time frame. That's where we're going to begin, I think. Here we go. So we're going to take a look at the ES, the NQ, the Dow, and the Russell 2000. And I'm just going to simply go repopulate these charts here. I've got something turned off. So we're just going to see that we're all in TD9 count bottom patterns out here. It's just we're going to complete it on the 60-minute NQ. We're going to complete it on the nope, we're not. We are in bar number 9 on the ES, bar number 9 on the Dow, and bar number 8 inside the Russell 2000. So somewhat synergistic here, but it is the NQ. The cool thing about this pattern, really, it's the NQ that is the one that is in the lead. So it's got the 12 noon is when it's going to complete its a bottom pattern. If we start trading below that low, well, maybe that's a failure. The next time frame we're going to look at, why don't you go look at it while we're in the break, is the 30-minute time frame. We'll see if that's synergistic. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. 11:18 in the morning. We've got the 30-minute time frame charts up for the equity future contracts. We do have synergy here, as each are in bar number 9 of their TD9 counts. Those are going to confirm at 11:30. That's 12 minutes from now. That pattern is going to complete at 12 noon. The bottom can come in anytime between now and 12 noon. So you're going to be keeping an eye on a 30-minute time frame chart, knowing that the 60 minutes are also showing TD9 count bottom patterns. Let's move off of this at this moment in time. Let's go see what's going on with regard to the spot VIX index and the advanced decline oscillator. So we'll pull that chart up on our screen. Here we can see on the left-hand side, we can see the New York, the advanced decline oscillator still above 0. Wow. So we've got conflicting messages here. When you are above the 0 threshold level, that's the difference between the 19 and 39 period exponential moving average of the advanced decline line itself. When it's above 0, it is providing buyers with an edge. Whereas with the spot VIX index, trade above its 50-day exponential moving average, closed just below it yesterday. We are well above it today. You're at 18. The 50-day is at 1757. We're trading at 1916. Now, that puts us above that 50-day exponential moving average, and the two offset each other here. Although we are certainly getting decline in the market, we can see New York Stock Exchange found resistance at its Rhodes momentum indicator top from back on October 6th of 2025 out here. That's the level that price would need to close above in order to one trigger, to just simply to negate that signal. Now, let's move back over real quickly because close this chart out. But it looks to me like we have a rate of change above plus 10%. So let's go check in on that. Let me see where we're at this moment in time. So I want to look at the spot VIX index. Spot VIX index is up, nope, just by 9%. So if the spot VIX index continues to move higher today, and we're at 1907, I don't know where that 10% cutoff one-day rate of change is. You could calculate that. Maybe it's around 1917 or 1915 or something like that. But if we get a one-day rate of change above plus 10%, you want to watch overnight. Could even start earlier, late this afternoon. You're looking for those 30-minute charts, quite frankly, to generate Rhodes momentum indicator bottom patterns all at the same time. You'd like to have some real synergy there, and that would tell you that you've got a good bounce that's underway. So don't have that as we speak just yet, but certainly worth paying attention to. If we take a look at the daily equity future contracts here, let's pull those up on our screen. We're going to see that we are trading below the Perigee pivot point, I believe, now on all four contracts. We are. That's that blue horizontal line. I take that back, with the exception being the Dow equity future contract. Now, on the Dow equity future contract, it yesterday formed an A to B equals CD pattern to the upside. That price point is 49,395. Now, it'll be much easier for it to complete that pattern if price were to stay above the top of its profile. That's at 48,214. If we close underneath that today, that says yesterday's message was a false breakout message from a profile standpoint. Doesn't negate the A to B equals CD pattern to the upside out there. As far as ultimate support, well, the Russell, we take a look at it, it is trading below profile support at 24.2580, and it's trading into its hammer candle out here. What else can I share with you? Support, important support on the daily NQ, 25.047. That's the bottom of its daily profile, 67.45 for the ES Mini. Okay, let's move away from this stuff. We do have a few requests that have come in. So is there anything else? Just looking at my screen. I don't think there was. Oh, there's one more thing for me to share before we move on, and that's how are the equal-weighted ETFs doing this morning compared to the weighted version. So up at the top, you have the three equal-weighted ETFs that we track, the NASDAQ 100 on the left, the S&P in the center, the Dow on the right-hand side. If we take a look at the Qs on the bottom chart, you can see we're trading below profile support. We're actually trading into the swing point, or getting close to it from back on, let me get my cursor out here. It's easier for me to see the day that way. Back into the swing point from November the 7th out here. Do we actually get down to it? We did not get down to it. The high is 609.95. The low so far today, 610.42. But we're close to that swing point. We're trading below profile support. If you look at the QQEW, we're nowhere near that same swing point. And we're well above. We're just simply, we're not even below the low from, we're below the low from yesterday. But look at how the QQEW standing stronger, much stronger than the Qs themselves. So the Qs may want to target that bottom of the hammer candle. Maybe they even want to target 595.50, the TD9 count breakout level. But the Qs are holding stronger. Important to note out there. The same is true with the S&P 500. Here you got the SPY that's trading below the center of its profile, maybe gunning for the bottom of the profile at 673.58. And the RSP, the equal weighted ETF, is trading above profile resistance out there. This says, folks, be cautious to the downside. Be cautious. The equal weighted ETFs typically point to the true direction. If you take a look at the EDOW, still well above the top of its profile, whereas on the Dow Diamonds, we're back inside it. We still have a breakout message. We still have a confirmed sell A to B equals CD pattern on the upside. Now, I don't know if it was with volume. The equal-weighted ETF swing point, October 28th, volume there was 8,900 shares. We passed it, closed above it yesterday, 19,000 shares. So the Dow is telling you, almost like with certainty, that it is formed an A to B equals CD pattern. The equal weighted most certainly is giving us that. I don't know where we're at on the weekly time frame right now. It doesn't matter to me, but it's most important for me to be able to share this message with you. Don't trust anything I say. Go back and look at the equal weighted ETFs. Go put on the top portion of the screen the equal weighted ETF, and below it the weighted one. And then go look at tops and bottom signals or so forth, and then see what they tell you. And then you'd understand why I say pay attention to the equal weighted ETFs out there. We pretty much ignore them. You don't want to ignore them, especially at times like these, in order to be able to get the read of the markets out there. All right, we're going to close those down, and now we're going to go take a look at some requests that have come in. The first one coming in from John in Milwaukee, and John wants to take a look at ticker symbol CARR out here. So let's pull it up on our screen. And John's asking for an outlook for 2026 out there. Don't know if I can do that, but let me give you the outlook as where we're at today. So, daily time frame, yesterday tested and rejected a Rhodes Momentum Indicator bottom swing point. That was from October the 14th. That swing point has volume of 6.5 million shares. Yesterday we tested and rejected, it was 7.2 when we closed inside that swing point. That says, John, when you close inside a swing point with volume, especially if you've tested it, odds favor you're going to test it again. So most likely we're going to get back down to 55.33. What's the weekly chart doing? Testing the same swing point. That swing point had volume on a weekly basis of 31 million shares. So far this week, we're down with 16 million shares. So you're pulling back with light volume. That's a positive. But the daily still needs to get back down and test that swing point. The only and if those hold out here, that's just a swing point test. There's no other bottom pattern. The daily's got the bottom pattern signal out there. The weekly does not have a similar pattern. In fact, the weekly has a negated TD9 count. But you're asking, what's the outlook for 2026 out here? To be honest, John, and really the monthly chart sort of really sets that up. And that is that it's been trading in a consolidation pattern. We're down towards the bottom of its consolidation. So as a consolidation pattern here, we've got this swing point from back in April of 2025. You've got that low. That low was being tested with the April 2024 low out there. So that in essence sets up the bottom of our consolidation, and the monthly chart may be headed back to those levels as well. Or maybe it's headed back to its break at 53.13. So John, we don't have much of an outlook for 2026 right now. We're trying to find out if this thing can find a bottom, even if it's at the consolidation. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're going to take a look at RGTI for Tom G. Question is, how low can this go? So we know we've got an A to B equals CD pattern to the downside as we take a look at the daily time frame chart. Tops with the TD9 count pattern. Now, the B point out here forms on the trading day of October 22nd, 114 million shares. We never even got close to that kind of volume as price passed the B point. 57 million maybe was the most back on November 17th, or November 7th, that is. We're not at November 17th just yet. So this is just a perfect example that you do not need to necessarily, look, if you've got volume, it increases the odds that you're going to go ahead and complete the A to B equals CD pattern. If you don't have the volume, maybe you don't. Well, this could be a maybe you don't. Why is that? Because today's going to become bar number 8 of a TD9 count. So this tells us that first we've got A to B equals CD pattern. Its initial price projection, that's the 1-to-1 price projection, Tom, is around 2055. So that's the first place to note. Secondly, you're in bar number 8 of a TD9 count. We know that bottoms or tops can form on the low. Let's talk about bottoms. The low of bar number 8. Bar number 9, which has to complete, and that just simply needs a close tomorrow below the close of bar number 5. Seems like a likely outcome, or it can be the low of the bar following bar number 9. So you're likely to get a bottoming pattern between today and Monday of next week, and you'll still have a price target of 2055. Turns out you can't get to 2055 until you close below, or at least move below, the bottom of the weekly profile, Tom, and that's at 2321. So we may be nearing, we should be nearing a bottoming signal inside of Rigetti, RGTI. Whether that play takes place today, or it's tomorrow, or it's on Monday, that I don't know. It looks to me like we still have lower to go. We have a Rhodes Momentum Indicator top on the weekly time frame, so there's really no reason for it not to get down to 2321 other than a bottoming pattern forming on the daily time frame. So hope that makes sense to you, and thanks so much for your request out there. I'm sure we'll look at our GTI tomorrow. Let's take a look at Hut out here. This is for Tom C. Tom wants to add to his position, so let's go see what HUT is trading at and what the patterns are in the daily, weekly, and monthly time frame. Turns out that just like RGTI, really very similar to RGTI, is that you're going to get a maybe a TD9 count bottom pattern between today and Monday. Bar number 8 forming today. Now, bar number 8 is also taking out a swing point from back on November 7th that had volume of 7.3 million shares. So far today, we've done, 4.5 million shares. So you definitely have the volume on that A to B equals CD pattern. It's a small one that I'm going to draw in here. So here's our A point, get down to that swing point that we were looking at. We know we have the volume at this stage here. So now that A to B equals CD pattern gives us an initial price projection down around 33.49. I'm not saying that's where you add to. And price may not get down there because today is bar number 8 of a TD9 count. I don't want to repeat myself, but basically I would be repeating myself if we just went through the whole TD9 count process again between today and Monday. But the weekly chart says, actually the weekly chart, which has a TD9 count top, Tom, is trading inside the bullish zone or the buy zone of its weekly profile between 34.78 and 39.78 out there. So you're likely to get a bottom. Don't know whether it's today, tomorrow, Monday. Maybe it goes on, makes that A to B equals CD pattern. But then we should get a rally. Now, that should be a pretty strong rally. The rally should at least take us towards its daily oscillator and change line. That's way up at the 47.54 level. Right now, we're trading out 38.22. So you're asking where to add. Watch how this trades tomorrow, the next day out there. Maybe look at your intraday charts out there for some type of bottoming signal or pattern. And that's what you're looking for. Again, the weekly time frame chart, you're trading below its oscillator and change line, but into the buy zone. It doesn't have to get all the way down to that 34.78 level out there. So that's what's happening with HUT. SATP wants to take a couple of symbols out here. The first one, SOUN. Looking for a bottom as well. Would like to add to some shares. Oh, I love that. Thank you. And so this negates its TD9 count. Whoops. I mean to do that. I meant to do this. This negated its TD9 count bottoming pattern after a 24-hour bounce. That's it. So it tells you about a strong momentum move to the downside. However, getting back to a breakout level, 1214, can be a bottom. What's the low of today's trading out here? 1214, right to the penny. So it's gotten back to its breakout level. Let's look at the hourly, not the hourly, the weekly chart. Weekly chart shows that we are trading below, and we closed below last week, the bottom of its bull structured profile. We're below last week's low. This is going to be week number 4 to the downside. Let's open up the weekly chart. What does this typically do with what is its cadence, so to speak? Well, it does do 4 days to the downside, 4 weeks to the downside, but we can also see a number of 5-week moves to the downside. So I don't want to say that this is going to be a bottom, especially with us trading below profile support out there. So now it's going to be all about the daily to turn this ship around. And the daily's only at its breakout level. You'd really prefer to see some kind of bottom pattern out there. So it looks a bit weak to me out here. And look, even on the daily time frame, the last time we saw at least a 2-day rally was back on October the 14th. All the other rallies since then have been basically 1-bar rallies out there. And I don't show those numbers just not to get too confused with numbers on my screen out here. So it's got potential, but the weekly and the monthly is saying maybe not so fast. Let's try HIMS. Maybe that's got some better patterns for you. So let's pull that set of charts up on our screen. HIMS is the ticker symbol. And as we take a look at that, this is trading out as we speak. We're having a bad week, bad month, bad day, and negating a TD9 count bottom pattern that formed yesterday. So don't go anywhere near this. We're below profile support on the weekly. We're back inside the profile on the monthly time frame chart. Yeah, I don't see anything here. I don't see anything here inside of him. So no adding to HIMS, at least at this moment in time. And I can't even tell you exactly. Look, there's an A to B equals CD pattern to the downside. Looks like that was probably a 0.786 retracement. We're probably near the 1-to-1 level on the weekly time frame. We'll just simply move this over here, see where it actually falls. And are we there? You were pretty close to the 1-to-1 A to B equals CD pattern to the downside, but no bottom signal here inside of HIMS or really inside the other instrument that we took a look at. So hope that helps you out, Sat. Thanks so much for your request. Some more requests that have come in. The next two from Mohammed. AESI is the ticker symbol we're going to go look at. And this is just simply a general review. So the monthly chart is going to complete a TD9 count bottom pattern. Man, the stockholders in this are grateful for that. Why? Because basically almost nobody out here, there's a few, are in a winning position out here. We're trading at 906. Only those people that bought this instrument between the price point of 833 and 906, well, the 906 guys aren't having a blast. So very few people out here. Now, in the daily time frame, it sure would be nice to have some kind of bottom signal. I'm going to open up the chart a little bit further here, see if we can find anything to hang our hat on. So we can't hang our hat just yet because it's we're going to a hard break in less than 20 seconds out there. I'll see what I can figure out during the break out here. Of course, I'd love to hear from you. Oh, ELO is in the game, wants to take a look at HCA. So we'll do that. Spokane Bob wants to look at the XLE and CRWV. Thank you both for that. I'll get those charts set up and we'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at the charts here for AESI. All kinds of A to B equals CD patterns to the downside out there. So a bullish reversal candle on the daily time frame would confirm a buy the D point pattern out here. The monthly chart is trading below profile support, below its red oscillator and change line. Needs a bullish reversal candle to confirm a bottom signal. The monthly, as we said, at the end of the month is going to go ahead and complete a TD9 count bottom. So I'd say at least at this moment in time, Mohammed, you need a bullish reversal candle for the daily time frame to consider taking a long position. Let's take a look at RTX. You also wanted to look at that instrument. RTX right now trading out at the price point of 175.37. It did form a Rhodes momentum indicator top a couple weeks ago. That has led to a consolidation with inside its daily profile. The range there, Mohammed, is between 173.75 at support, 181.31 at resistance. The weekly time frame chart, no topping signal. It has support at 173.08. The monthly chart out here has got no topping signal. Well, actually, I've got to populate the chart. It has a TD9 count top, so you got to populate the chart. That says that price should pull back to the 157.77-ish area. By the way, the signal, even though it's got a TD9 count top, it is neutral. So top on the daily, topping pattern on the monthly chart, no topping pattern on the weekly chart out there. That's what we've got for you. If this is going to break down, you need to see a close below 173 even Steven out there. That would also maybe trigger a daily A to B equals CD pattern. We'd be below the weekly oscillator and change line, and then that would set up that potential target for that 157-ish type level out there. So that's what we see with regard to RTX. Bob in Spokane wants to take a look at the energy sector, XLE. Let's pull that up on our screens. The XLE is, yesterday it was trading into its swing point. Today it is, has it gotten up to touch it? Let's see. So the swing point that I'm referring to, yes, it has, is from back on the trading session of September 26. The low out there, 91.28, 20 million shares. The high today is at 91.30. So we've tested that swing point. Volume, though, today is 5 million shares in a little over 2 hours of trading. So it's about a 15 million share a day, give or take, going into 20. Not too shabby. It is trading with inside its daily profile, quite a wide profile out there. It goes from, Bob, from 86.95 at support to 91.01 as resistance. And we're at 91.06 right now. It'd be great to close back above profile resistance, even if it's on lighter volume. It'd be above profile resistance and its oscillator chains on, would be signaling that it would likely still take another run for that swing point out there. If you look at the weekly time frame chart, what do we have out here? We're trading inside its profile, bullish in structure. It would be nice to close above 90.64 this week and next week. If it did that, it would then be signaling to you and I that price should likely make a move to the top of its profile at 95.21. On a weekly basis, price is trading into a swing point from back in September 26 of 2025. 87 million shares traded hands that week. This week, we are up with 55. So we got 55 going into 87 on a daily basis. This does maybe somewhere around, 20 million shares, give or take. So maybe 15. So it looks like we're going to be light in the loafers there. Monthly time frame, as you can see out here, is nothing but a sideways consolidation that has basically been going on for quite some time. You could actually take us back into March of 2022 out there. What that does tell you is when that consolidation, Bob, does break, you should have a measured move equal to that consolidation. And it's almost a $25 consolidation. Not 25, it's probably $20 consolidation type pattern out there. Right now, price is dealing with its oscillator and change line as resistance. If price can get above it, that means close above it. 91.60, you get us up towards the top of that consolidation pattern. Certainly the top of its profile, 94.71. So that's what I see when I take a look at the XLE. Hope that helps you out. You also want to look at Core Wave, I believe it is CRWV. So let's get that set of charts up on our screen, see what we have here. Sorry about that, just needed a swig of water. Ooh, not good for Core Wave. Formed a TD9 count bottom yesterday below its breakout level. We're negating that pattern today. Strong downward momentum move. Now there's a big A to B equals CD pattern. I'm not going to draw that in here for you. You can visually see that. That requires a bullish reversal candle to confirm a bottom. So that's the first thing that you'd be looking for, Bob. We've got price that's taken out prior swings. It's taken out a hammer candle from back on September the 6th out there. That low was 84.40. 18 million shares. Again, we've done 22 million shares. Man, there's some volume and it's taking that out. What does that trigger for us? Looks like it's going to trigger an A to B equals CD pattern. Easier for us to draw that in on the weekly chart. Plus, we want to check out weekly volume. That's the week of September 5th. Volume 88 million shares so far this week. 184 million shares. Core Wave getting ready to crash. Now, when I say crash, I'm talking about just simply a nice, big, large A to B equals CD pattern to the downside. Let's copy, paste, and assemble so I can keep this up there next time somebody asks. So I don't have to redraw this here. Here's your A point, your B point, your C point, and the D point is giving us a price projection objective of around $50. So it looks to me like Core Wave is headed towards that $50 level. It could go lower than that. If you do get a bullish reversal candle at any time frame, that could stop the fall. But other than that, it looks like Core Wave wants to head lower. The monthly chart, unfortunately, Bob, doesn't give us any data because it's only been trading since March of 2025 out there. But we are below last month's low, the prior month's low. All of these signals are basically piss poor as we speak at the moment out here. So it does look like CRWV wants to head lower out there. Hope that helps you. Let's go take a HCA. This is for ELO inside the Tiger's Den. Let's pull that chart up on our screen. HCA is trading out at 473.83. So what do we have here? We got a negated TD9 count top on the daily time frame. We don't have any kind of topping pattern at present, and we have prices trading just above the top of its daily profile. That number, 472.77, and we're trading above, we're at 474.07. So that's positive. Weekly chart has triggered bar number 8 of a TD9 count. Says you could get a top between this week and the next two. Monthly chart is going to go ahead and form a TD9 count top at the end of the month. It'll complete it at the end of December out there. So the daily's pretty bullish. The weekly's cautious, but that top might not take place for a couple of weeks. And the monthly says, you know, maybe it's this month, maybe it's next month out there. Things look pretty good here for HCA ELO. In order for it to turn to the opposite direction, you really need to see it close below the bottom of its daily profile, and that's at the 451.10 level. So I hope that helps you out. Looks like I might have another request out here from Dennis. What is pink looking? P-I-N-K. Let's go look at pink, P-I-N-K. So we took a look at HIMS, or Blue Chew, and now we're going to take a pink out here. So P-I-N-K, we got to let these charts here populate. That's going to take a moment. Trade down at 34.71. No daily topping pattern, so Pink's saying, I want green. I want to head higher. The weekly time frame. Negated TD9 count top a couple weeks ago. Traded above profile support. It wants higher. The monthly, taking out a TD9 count pattern, will accomplish that task with a close above 31.73. We're at 34.71. So you're getting a signal of a move higher. Now, the monthly chart shows the A to B equals CD pattern. It's not going to take us substantially above where we're at, I don't think. Let me just see if I can do this before we get to that break. I don't think I can. I'm going to try. We did it. So, yeah, the A to B equals CD pattern has a price projection about 35.61. Pink headed higher. Dennis in West Palm Beach. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Let's turn back to those NQ charts out there as we go into the close of the show. You're going to get that completed TD9 count bottom for the NQ for its 60-minute time frame. You're going to get and this is as we come to 12 noon. You're going to get a completed TD9 count bottom for the 30-minute time frame. The 15-minute time frame needs a bullish reversal candle to confirm a Rhodes momentum indicator bottom. The 10-minute already has a Rhodes momentum indicator bottom. It's in the process of maybe forming a TD9 count bottom as well. We don't need that. What it needs, if there's going to be any rally, is to get above its oscillator and change line. That's the first level to be watching. Right now, that's at about 25, 218, 219-ish level out there, maybe 220. If it can close above that, then what we'd be looking for is move to 25,282. We'd also then be running into the oscillator and change line for the 15-minute chart. Watch that. The 15-minute time frame chart, it's a bullish structured profile. That price closed below. If it's more than a counter trend move for a 15-minute time frame, price must close above 25,343. If we take the 30-minute time frame chart, it should rally up towards its oscillator and change line, currently printed at 25,379. The 60-minute time frame should do the same, currently printed at 25,469. It's only the bottom row of charts that has those bottom signals. If these bottom patterns fail, and they can, then price would go target most likely 25,047. 25,047 is the bottom of its daily profile. And if that level fails, 24,937, the 5-hour TD9 count breakout level of support. That's what's going on with the NQ. I will put the charts on my screen here for the ES Mini. I won't be able to go through those because we just don't have enough time out here. But for those of you inside the Tiger's Den, or if you're just watching, maybe on Tiger TV, you take a snapshot of this screen here. And on this snapshot of the screen, what you're watching for, again, are oscillator and change line levels on a rally. You're looking at profile levels if price can get above those areas. And again, here, it is only the bottom row of charts that have those patterns. Now, they're slightly different. The 60-minute ES Mini will confirm a TD9 count at 12 noon. It completes its pattern at 1. But we do have a completed TD9 count pattern for the 30-minute chart. This is the ES Mini, so watch that as well as the 10 and 15-minute. Have a terrific Thursday, folks. Thanks for joining me. I'll look forward to seeing you tomorrow on Fabulous and Fantastic Friday. Take care and be safe out there.